Hello friends, let's start with the investor. So he has currently 40 lakh rupees to invest immediately apart from what he has in his portfolio, and he says that he is working from Africa. So he generally used to place GTT order to buy stock or to sell stock. And he says that he has time to check the account while he works and he wants us to review the portfolio. So let's start with the portfolio review. So total invested amount is 56 lakh 86,000 and current value is 53 lakh 34,000. Currently there is a loss of 3 lakh 48,000, which is approx 6%, and the number of holdings are 30. So first company is Aarti Drugs, quantity is 400, invested amount is 1 lakh 80,000 and currently there is a loss of 11%. So this company belongs to the pharmaceutical sector and it is part of the renowned group which is Aarti Group. But this company is a small cap company with a market cap of less than 4,000 crores. So it will behave like a typical small cap. There may be a scenario wherein this company may not give any return for the period of 4 to 5 years also. But there can also be a possibility that in the next year, it may give you 1000% return. And this company gave a run up after the COVID rally. And during the COVID, there was a lot of demand for pharmaceutical products. So the pharmaceutical industry gave a very good run up at that time. Now, as we all know, COVID has almost gone and therefore it is now impacting their sales. So nobody knows when it is going to give a next run up. In terms of the business of the company is okay. If I were you and if I wanted to invest in pharmaceutical sector, then I would have gone with the market leader, which in this case is Divi's Lab. Apart from Divi's Lab, there is hardly any company which has given very good and consistent return. So I would have taken out the money from this stock and would have invested in some consistent compounder stock, which irrespective of COVID, no COVID, keeps on increasing your wealth after every 3 to 5 years. Next company is Ajanta Pharma and quantity is 150, invested amount is 2 lakh rupees and currently there is a loss of 12%. So whatever comments I provided for Aarti Drugs applies for Ajanta Pharma as well. The only difference is that Ajanta Pharma is a much bigger company than Aarti Drug. But as I said, in the pharma sector, if you want to go with only the leader. Next company is Alkylamine, quantity is 100, invested amount is 2,92,000 and currently there is a loss of 9%. This company is a leader in the alphatic amine and you can hold this company for long term. This company gave a very good run up recently and right now it is consolidating, and this has been the nature of this company, but it has a very good market share and the demand for amine is going to continue and increase in the future, so you can stay with this company. Next company is Amara battery, quantity is 200 and invested amount is 1 lakh. Currently there is a profit of 12%. This also is a okay company or an average company. If you check the returns of this company on Screener website, you will see that in the last 10 years, 5 years, 3 years, the company has not provided good consistent CAGR returns. So I would have avoided this company. The reason is because there are better companies which are available in share market, which are providing better returns, which are growing its profit at a better rate also. Next company is Avanti Feed, invested amount is 2,16,000 and quantity is 500 and currently there is a loss of 9%. This again is a small cap company with a market cap of only 5,000 crores. The profit of this company is not consistent, it's very fluctuating and the CAGR return also is not that great. Now I'm at the return profile for this company and you can see the profit compounding growth. In the last 12 trailing month it looks okay, but for 5 years and 3 years you can see it is in 0 or negative. And if I look at the stock price CAGR, it's in negative all throughout 5 year, 3 year, 1 year, and only in the last 10 year it is showing a return of 48%. So this company again will behave like a small cap. It may or may not give you return. So to me this is a below average company. If this would have been my portfolio, I would have not kept a below average company in my portfolio. And in case you want to know which website I use to check all these details about the company, then the website name is Screener. You can also use this to do your research on the companies. Next company is Indiamart and quantity is 30, invested amount is 1,32,000 and currently there is a profit of 5%. This is a company which provides the largest B2B digital marketplace. So similar to Amazon, wherein Amazon provide B2C platform or marketplace, this company provide a marketplace for business to business segment. The business model of this company is good, but you will have to track the performance of the company on quarter basis, because recently the profit of the companies have started going down. So if it continues to go down, then you may not see any return in this company. For this company to provide you return, the profit has to increase consistently on year basis. So this will require a lot of tracking in case you want to keep this company in your portfolio. Next company is Infosys, quantity is 350, invested amount is 5,37,000 and currently there is a profit of 2%. This is a company from the IT sector and a very good and a renowned company. And you have given an allocation of close to 10% to this company, which is fine. To Infosys, TCS, you can give this kind of allocation, so you can continue with this company. Next company is LTTS, quantity is 100, invested amount is 3,63,000. Currently there is a loss of 4%. This also is a good company, you can continue to hold it. Next company is Lux India, quantity is 100, invested amount is 2,69,000. Currently there is a loss of 45%. Now this company's business is very good, it is into the hosiery segment, and the profit of this company was also increasing at a good rate, and its share price was also increasing at a very healthy CAGR rate. However, there was an incident which happened in this company wherein there was insider trading done by the promoters. So what they were doing is that before the results, they were asking their relatives to buy the shares of the company on their behalf, and at the time of the results, when the share prices were going up, because they already knew that the results will be good, then they were selling those shares. So this is known as insider trading, and it is illegal, and this was caught by SEBI, and because of which you have seen that the share price has tanked after that, because now there is a question on promoters' credibility, which is very important in any business. Whenever market finds out that the promoters are doing something wrong, something illegal, they will strip away the valuation of that company. It will give a big beating to that share price also, which you are seeing in this case. For this company, I can only hope that you recover your amount or you get it close to your capital amount. Whenever you get that opportunity, I think it will be the right decision to get out of this company, because whenever there is a question mark on promoters' credibility, you should not stay with that company. We all know what happened with the Yes Bank. So this is one company which I will definitely avoid. Next company is Metropolis. Invested amount is 1,94,000, quantity is 100, and currently there is a loss of 33%. So similar to pharmaceutical industry, the hospital industry is also taking a beating right now, but it's not a bad company, so to say. You can stay invested in this company. But before investing in these type of small cap companies, since your capital amount is already very good, first you should do allocation to consistent compounder companies, the market leader companies, and then you can think of finding out some small cap companies which can give you exponential return. But right now what I see is that majority of the companies are either small cap or mid cap. Next company is NMCC, quantity is 1500, invested amount is 66,000, and currently there is a profit of 168%. So this company, we know it is from the PSU sector, and now I'm at the chart for NMCC, and if I look at 1 year return, it has still provided 23% return in negative, and if I look at 5-year return, it has provided negative return of 11% over the period of 5 years. So if somebody has invested in this company 5 years ago, they are still not able to recover their invested amount. The reason why you are getting good return on this company is because you were able to catch this company when it was around this area. But in this case, I can only say that you got lucky, because this is not a company where we should invest our capital for long-term growth. So I would have stayed away with this company, and since I'm getting a profit already, I would have booked my profit and would have invested in some consistent compounder company. Next company is Tanla, and quantity is 200, invested amount is 1,60,000. Currently there is a loss of 22%. This again is a small cap company with a market cap of 8,000 crores. This also is an average company. If you want, you can continue with this company. But the expectation from this company should be like of a small cap, that when it will run like a Usain Bolt, but when it will not run, it will test your patience. Now let's go a little fast. Next company is BEPL, quantity is 1000, invested amount is 1,69,000. Currently there is a loss of 36%. This company again is a small cap company with a market size of only 1,700 crores. A below average company in my view. I would have not invested in this company. Next company is Britannia, quantity is 50, invested amount is 1,81,000, and currently there is a profit of 27%. This company is a good company from the FMCG sector. You can continue to hold it. Next company is CAMS, quantity is 25, invested amount is 77,000. Currently there is a loss of 27%. This company is a good company. Their business model is also good. However, this company will be cyclical in nature. So whenever there will be a bull market and a lot of people will start opening their Demat account, that is when you will see a good growth in this company. But whenever the market is flat and whenever there is a bear run, that is when you will see that this company will not perform. So if you take a long-term perspective of 10 year, then it is fine, because in the period of 10 year, the percentage of people who will open Demat account is going to increase, because in India the penetration is still very less. Next company is GOLDPAL, and quantity is 30, invested amount is 46,000, and currently there is a loss of 5.73%. This company again is from the FMCG sector. If you have already invested in Britannia, then I do not see any need to invest in another FMCG company. If you want, you can invest the amount you have invested in GOLDPAL in Britannia itself. Next company is Divi's Lab, quantity is 80, invested amount is 2,99,000. Currently there is a loss of 25%. With this company you can continue, because this is the market leader. Right now the entire sector is facing the heat, but when this sector will start performing, this is the company which is going to lead the run up. Next company is Dixon, quantity is 50, invested amount is 1,39,000. Currently there is no loss, no profit situation. This also is a good company. If you have conviction on this company, you can continue to hold. Next company is Daulat Algotech and quantity is 25, invested amount is 2000 rupees, and currently there is a loss of 33%. This company is a micro cap company with a market cap of only 950 crores. You can stay away from this company because unnecessary it is going to take up this space in your portfolio. Next company is Goodyear, quantity is 50, invested amount is 50,000. Currently there is a profit of 4%. This again is a small cap company from the tire sector. If at all you want to go with a company from the tire sector, you can think of BKT, which is Balkrishnan Tires. BKT is the leader in the tire sector and it will provide you much better and consistent return. Next company is HCL Tech, quantity is 300, invested amount is 286, and currently there is a profit of 19%. This also is a good company from the IT sector. You can continue with this company. Next company is HDFC AMC, quantity is 50, invested amount is 1,20,000. Currently there is a loss of 20%. This is a good company from a very renowned group, HDFC. But recently this company has been losing market share and their quarterly numbers are also not looking that great, because of which you are not seeing any movement in this stock. The stock is also not performing. But if you have conviction because it belongs to a renowned group, which is HDFC, you can continue with this stock. Next company is HDFC Bank, quantity is 100, invested amount is 1,57,000, and currently there is a profit of 4%. This bank is the number one bank in the private sector. With this bank you can definitely continue, and in case you want to invest more in this bank, you can also increase your holding to 10%. Next company is Hiranba, quantity is 250, invested amount is 95,000. Currently there is a loss of 10%. This again is a very small company with a market cap of only 1,350, and this company is from the agrochemical sector. You could have gone with PI industry in this case because that has provided better return than any other share in this sector, and the returns have also been very consistent. Next company is Hindustan Unilever and quantity is 100, invested amount is 2,48,000. Currently there is a profit of 6%. This company again is from the FMCG sector. This also is a good company. If you want, you can continue. Till now you have 3 FMCG company. One is Hindustan Unilever, one is GOLDPAL, and other one is Britannia. And in the FMCG sector you have all 3 slow companies. So in case you want to keep more than 2 companies of the FMCG sector, what you can do is keep one stable companies, which can be Britannia in this case out of these 3, because Britannia has provided better returns than all these 3 companies. Then you can have one more company in the FMCG sector, but that company should be growing at a faster rate, which in this case can be Tata Consumers or VBL. Both these 2 companies are growing very fast. So these type of combo will help you keep your portfolio stable and provide you good growth also. Next company is HLE Glasscoat, quantity is 250, invested amount is 1,85,000. Currently there is a loss of 20%. So this again is a small cap company with a market cap of only 3,700. So there is nothing wrong with the business of this company also. It is behaving the way it should behave, which is up and down, because it's a small cap company. So in case you want to stay invested in small cap, you will have to learn to deal with these ups and downs. Next company is TCS, quantity is 100, invested amount is 3,29,000, and currently I think there is a profit of 5%. This is a right company that you have invested in. This is a market leader in the IT sector, but again there is a little problem, which is that in one sector, which is IT sector, you have invested in 3 companies. You have invested in TCS, you have invested in Infosys, and you have invested in HCL Tech. There is nothing wrong with all these 3 companies. These are all good companies. If you want, you can continue with all these 3 companies also. A good approach would have been that you could have invested in either TCS or Infosys, and you could have invested in one more company from the same sector, but that company should have been a mid-cap company from the IT sector. In case you want to look for a mid-cap IT company or a company which is growing faster than TCS, Infosys and HCL, then you can look at LTI, you can look at Persistence, you can look at Coforge. Next company is Thyrocare, invested amount is 2,52,000, quantity is 400. Currently there is a loss of 21%. This company again is from the hospital industry, and as I mentioned earlier, it is also facing the same problem. So this is one sector which I would avoid. Next company is Vedanta, quantity invested is 600, invested amount is 1,66,000. Currently there is a profit of 10%. This again is a company which I will avoid because this company is also not consistent in terms of providing return. You can look at the return profile on the screener website. Next company is Whirlpool, quantity is 100, invested amount is 1,56,000. Currently there is a loss of 19%. This company is also a okay company. The profit of this company is not growing at a good rate, and that's why you're not seeing a good return or good movement in the share price of this company. So this was the last company, and what I've noticed is that the portfolio is brimming with small cap and mid cap companies. There are large cap companies, there are market leaders, but those are very few. So what you can do is, my friend, as I mentioned earlier also, majority of your investment, which is 70 to 80%, put it in the market leaders, put it in the consistent compounder companies. The examples are Asian Paint, Titan, Pidilite, Astral, Havells, Polycab, Nestle, Bajaj Finance. These are all the companies that you don't have in your portfolio. You can do your research on these companies and then take the investing decision. But right now the number of shares are too much and the companies are also not that great. Most of the companies are either average or below average. And I'm sure you're not looking for an average return or a below average return. So stay with market leaders and consistent compounder majority of the time, and the remaining 30 or 40% you can invest in small cap companies or mid cap companies, provided they are from the good sector which has given good returns, like consumption sector, chemical sector, IT sector, and whose profit are also increasing faster than the market leaders. Then only invest in the best companies to get the best results. And the remaining 40 lakhs that you currently have that you wanted to invest, use that in accumulating the market leaders, and out of these 30 shares, try to bring it down to at least 20 shares, and then you do the allocation accordingly. And keep watching the portfolio reviews, because with these portfolio reviews you will learn a lot of things. And in some of the portfolio reviews I've also shown you how to do the allocation, and I've also shown you examples of portfolio made up of only market leaders, and I've also shown the return that it has given in the last 5 years. If you would have invested in only market leader company also, you would have got a return of 200% in 5 years time, which is very good, because it means that your invested amount, which is currently 50 lakh, would have turned into 1.5 crores. If you are new and want to start your investing journey, then the link is mentioned in the description box and also in the comment section. You can use that link to open your free Demat account and you can start investing. And also, if you have any suggestion or if you want me to make a video on any specific topic, you can mention it in the comment section. And if you are new to this channel, do hit the subscribe button so that you can get regular update whenever there is a video uploaded. So bye for now. We'll meet in the next video with some new information. Thank you.